FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
We are on the Financial Survival Network. You're listening to Kerry Lutz, and you've been asking for me to get David Gurwitz back because you want to know where these markets are heading, or at least where the cycles appear to be pointing. So we've got him back. David, welcome back to the show.
Hey, Kerry, good to speak to you. We finally figured out to use Skype, so maybe sound less that it's coming from Mars.
Yeah, well, we did have some complaints because you got a funky phone on your end that kind of fades. So
yeah, I know.
But
it's like I like old things. The phone, it's one of these older systems. I definitely get upgraded, but I'm thinking of it. But maybe now that I'm doing much more calls on Skype, so that'll give me another reason not to fix the phone.
yeah, keep the phone. We'll just do Skype. And
Skype.
Yeah, I'm looking at your yesterday's newsletter, and the stock market. Everybody is saying, when's it going to go down? When's it going to crash? But basically, you're saying here there's no sell signal on the S&P and the Nasdaq, right?
Right. Well, first, let me explain our system a little bit. Your listeners, they kind of know what we do. They've heard me a few times. But buy signal, sell signal doesn't mean go long, go short. If you're on a buy signal, you don't want to be short, and it's unbalanced system prefers to be long. So on a sell signal, it means don't be long or hedge your long, but doesn't mean go short. So that's the first thing I want to stress. And all your listeners should write in and say they heard us speak, and they get a month free look at the research, which covers the main global macro areas: stocks, bonds, commodities, currencies, and economic indicators. So that's the first thing. But we wrote, our system's based on cycles and on levels. So it's direction and level, as well as timing, obviously. So direction is only from cycles. When I say that, cycles only give you direction, cannot give you levels. I'll explain why right now, because let's say we find a cycle in Apple, which was not that long ago, $99. Before it split, it used to be $99, then it was $199, it was $299, $399, $499, $599, $699, reached $702 at its high, and then we called the top. Then it came down under $5 into the fours, bounced up, and then it split. So it's got a new price now. But basically, let's say each one of those 100-point moves was a cycle top, right?
Sure.
That helps us find the direction, but the level is always different, right? It was 99, 109. So by definition, cycles are taking into account repeating equidistant top to tops, but the levels are always different because it's, we're trying to see when it hit its top, not what it was at the time. And therefore, the algorithm for target, by definition, is a different creature than the algorithm for cycle. I hope that made sense.
Sure. Yeah, we get it.
Right. So then, we talk about cycles, which usually work, but sometimes they confound even us, right? Because then they're conflicting, and we think, okay, cycles are bottoming, still going up. So the levels become more the chef's sauce that Charles and whoever else in our company, not too many people actually do the research. They have to decide which is running the show now. Are the levels telling us more? Cycles more? We know cycles are toppy, whatever that means, meaning, and NASDAQ 3820 and Dow cash 16770, and we cover the futures for the S&P NASDAQ because that's what the big funds trade. They don't trade the cash. I wouldn't jump out, and it depends. Listeners you have probably are not active traders. They're looking for longer term, medium term trends. We have people who do both. They trade intraday, they trade daily, they trade monthly, they trade yearly. We got everybody. So we try and write for everybody. These are the levels, but doesn't mean you should go short. And a lot of times we believe don't do anything, which is hard for people because the screen is addictive to press a button to click to do something, as you know.
Oh, yeah.
It's an addiction, and we're quite aware of that. That's why we prefer stand on the sidelines a lot, because at least you have a clear head. The worst thing is you're missing a gain you might have had rather than living through a loss you're in. Of the two, it's better to be A than B, and hopefully with us, you'll do B as well, but that you'll be in a winning trade, but we prefer to avoid losing trades. It's like in sports that you and I could talk about for the next 2 years. It's better not to be down 20 points and have to work your way back. It's, cut it to down 8, and then you have a different game, which is what San Antonio did in the last game against Miami. They were down a lot, and they just wouldn't let it continue, and then they brought the game back, and it changed, and it was over. Same thing with trading. You can actually be down, and I deal with this a lot. Like people were in gold, something you still know more about than I'll ever know, and they've been in it for 2 years. And when's the bottom? When's the bottom? Like, Daddy, when are we going to get there in this long trip? And the kid's in the back of the car. And the answer is this quarter is the bottom. But in the meantime, we called 2 bounces from 12 to 13 and out. And then New Mountain pops up the last month and out. So that kind of answers your question gold-wise. You can ask later that the bottom is this quarter. We could have we had a move up today, obviously. But we still think we've got another move down. Although we're not sure, because we know according to quarterly cycles, the bottom is this quarter. It could have been July 1 anyway to September 30th, because quarterly cycles is cycles based on quarterly data, daily cycles based on daily data, weekly cycles based on weekly data, monthly, et cetera, yearly, et cetera. So we try and combine them all, and it's a lot of work. It's not always perfect.
Mm-hmm. Oh, yeah. Nothing is perfect.
No.
So
that's kind of answering stocks and gold at the same time.
Mm-hmm. So, when we look at the markets now and see where we are, stock market, everybody believes it can't go higher, and yet it keeps going higher, right?
Well, according to us, we think we're going to have a bit of a downturn and then retest the highs again in Q3, Q4, even go a little past. But longer term, this is toppy longer term as well as shorter term.
Mm-hmm.
A lot of people say the Dow's going to 80,000 like we do, but we just think we're taking a detour first for quite a few years.
Right.
But that's why you got to watch what we say. It's easy to, like the commercial of Bird and Magic years ago that we play horse off the moon.
Mm-hmm.
We're kind of saying for the next 15 years, this is what's going to happen. We're playing horse, we're shooting down, but it doesn't, like the down move for the next 5 years, we think is not going to be straight down. There'll be 40% up moves also. So it's not so easy to be short with a 40% up move. Your stomach can really hurt, even if you think it continues down. And so it's why it's important to watch the research and see what we're saying. Try and combine all these different things, which is not easy.
Oh, yeah, that's for sure. Mm-hmm. And then we're looking at gold and silver. Basically, you kind of gave a high for gold of 1342, which it hit. Then it pulled back on Monday. But you say there's still a short-term buy signal for gold.
Right.
So it's kind of interesting, huh?
Yeah. So you got gold up short-term and bottoming long-term. So you can make 3 decisions. I'm going in long now because long-term I don't care. And that'll be fine, according to us. Or I have another move down maybe, and I'll rather trade that or wait till that bottoms. That's also fine. And then the question is also, which I don't know how to answer. I don't know anybody does. You have 100 grand, 1 million, 10 million. How do you allocate a trade? How much do you put on a trade? Mm-hmm. I don't, any number you pick is almost right, like 10%, 20. How do you size a trade? We have a lot of hedge fund clients, a lot of family office clients. And they say, how much would you put on? And I say, number one, we're not advisors, so that's not our business. But number two, if we like it, you could put 100, you could put 1 anywhere in between. This is what we think. I just know if you like it, because use other things beside us, and we like it, you may want to size it more than you originally thought. Because a lot of people use us as like the overlay to other things they think about, because there's a lot of other ways to analyze markets besides ours, and some of them are quite good. And so we recommend that people do their own thinking and bring us into the picture in addition to that to see if they all line up, and that helps them in sizing as well as actual deciding in that category what to do. Separate consideration as well.
Yeah. So, then we're looking at crude, which has kind of been bouncing around a bit. It broke 100. Now it's kind of back up again, but it's on a sell signal, right?
A close above 102 cancels the sell signal, but we did say for the last several weeks even with war, Mideast, in several places. The world is awash with oil.
Yeah.
So, but again, we don't think the news influences what's happening. We think the past patterns do.
Sure.
So the reality is, I'll look at the other way. Someone would say because the world is awash with oil, it should go down. And we say no, because the past patterns are topping, it should go down. And it just so happens at a top, you'll find the world awash with oil, which will overpower in the mindset of the voters on crude, which is what trading is, voting. That'll overpower the perception that the wars are going to affect the channels. There'll be less crude, and therefore prices will go up. Yeah. This is kind of what goes on subconsciously. And we, as you know quite well, better than most, we don't factor that in. I shouldn't say that. We don't consider that what's going to happen is determined by what the news is. And in fact, we predict how the news will be interpreted. That's what cycles are not. It's how the news is interpreted is what cycles really are all about.
All right. Well, hey, we'll talk about some other markets when we return on the Financial Survival Network.
FSN Radio. It's all about what's next.
Do you have Medicare or health insurance through your employer? If so, listen up. The healthcare reform wasn't written to save the healthcare industry or even to lower healthcare costs. Shoot, it isn't even designed to insure the uninsured. It's just a temporary political byproduct. Like a flat rock you step on in a swiftly moving stream, Obamacare is just a means to an end. Want to learn more about Obama's ultimate objective? Then you'll want to review our latest research presentation found on oclies.com. In it, a health expert and industry insider explains what you think you know about caring for your health is about to drastically change in 2014. Plus, he details the simple steps you could take to save thousands of dollars per year in health costs. It's free for you to preview at oclies.com. Don't waste time. What you don't know about the healthcare reform could hurt you and your family.
The Financial Survival Network. It's all about what's next.
And we are back with David Gurwitz of Charles Nenner Research on the Financial Survival Network. So get to, bonds and currencies. And, these are obviously the largest traded markets. Oh, before we go, though, natural gas, which, Charles had an uncanny call. I mean, it was up $9-10 per million BTUs. And he said it's going way lower. It broke $2 per million BTUs or per thousand cubic feet, whichever one you like. And then last winter it went up, and now you're looking for it to go back down again in long term, right?
Right. Well, that's a good long term. I don't know. Next year, long term, we see it heading. I mean, by this time next year, a lot lower than it is now, similar to the call that was made 4 years ago after Nat Gas was 12 and down to 6. Everyone thought it would go back up, and our system showed it heading back towards 2, which it went. And again, this is all math. There's nothing to do with drilling. We don't know about that stuff. We're not experts. I don't know. And then I spoke to just tell a quick story, my limited understanding of this stuff. I mean, one of the things the Talmud says, who's wise? One who learns from everybody. So
sure.
At 2 ears and one mouth, I happen to be talking a lot now, but I spend a lot of my day listening to people who know a lot more than I do. So a big oil gas guy was telling me to the effect, I'm going to summarize, longer conversation, that Nat Gas, I asked him, can crude go to 122 and Nat Gas go to $2? He goes, absolutely. I said, how? He said, because there's something else you have to consider. There's other gases. There's methane. There's other liquefied things that we drill for along with crude. And as crude goes up, it encourages more drilling in those other areas. And as a result, we find Nat Gas, separate from fracking, we find more Nat Gas doing the other stuff, which creates more supply. Therefore, in pursuing higher priced crude and higher priced medium methane gases and other things, liquefied, we're going to create more Nat Gas, so you'll have a greater supply, so you could see one going up while the other going down.
Interesting.
Even though our system says this, we have no idea why. It's funny, we know enough to know we don't know why it works. But that's wisdom in and of itself because it keeps working. And what do we know about Nat Gas? We only started covering it 4.5 years ago. It was not something Charles even looked at much. But the system is based on certain things that applies to all sets of numbers, which is beyond even the stock market. That's why war cycles we've talked about. He called 3 years ago and look around the world. Sunspot cycles, whatever that means, are topping longer term. So that will feel, according to him, a sense of depressed feeling physically, whatever that means. Again, we're not experts, but all these things combined is what we try and use to make some type of educated numerical guess on what's going to happen.
Right. And yeah, it could also, maybe it's reflecting something about what the weather is going to be next winter, since we had such a lovely winter in the Northeast this year, right?
Right. Although again, I as I say, let's go back when the stock market bottomed in 2009, which we called then. We were not long all these 66 months, but on the buy signal for most of it. And back then, everybody was hoping crude would go up. Just to give you an idea of how short historically minded people are. I remember so clearly everyone was hoping crude would go up. It would be an indication of increased industrial activity. Nowadays, if crude goes up, there's war coming. So it's funny. I don't mean it's funny. God forbid, funny. People die from this stuff. It's so funny. But it's interesting that the perception of things along different times is what is indicated at cycles. Like, look at when crude hit 147 and it dropped 100 points. Was it worth 147? That day it was. Was it worth 47, 8 months later? No. Was gold worth 1900 2 years ago? No. I guess it was. Now is it worth 13? Is it going to be worth 19 again, which is what we think? So all these moves that we look at in our unique way are reflections of different overall vantage points at the time they get there, even though they seem to repeat in patterns. So you're right about our Nat Gas call. We think the Aussie will bottom towards the end of the year, which is also part of the time we think the dollar will be topping, which is a longer-term thing. So therefore, even with a Dow that's much higher way down the road, it's reflected in dollars, which will be lower value. Therefore, it may not be as high dollar weighted wise 15 years from now as it may seem to be purely from a number point of view.
Yeah, what's with the dollar? When do you see that
end of this year, beginning of next year? We're not sure what will replace it. The euro has been surprisingly strong to most people, not to us. Europe's not in such good shape. You know, we could talk about Greece is a mess, Holland's a mess, Spain is a mess. Ireland's, I got clients all over the place tonight.
France.
But yet the euro's not a mess.
Mm-hmm.
And you'd think they'd want to make it lower in order to generate more, activity and things. So it just goes to show the A implied B logic of most people, again, according to us, doesn't run the show. Because logic is all smart enough to figure out everything in terms of A implies B, but doesn't seem to work.
Nope, does not seem to work for sure. And yeah, so you think the dollar is due for a fall sometime in the coming year, huh?
Yeah, even earlier than the coming year.
Earlier than the coming year, huh?
Yeah, but that's why people should watch the research, and it takes time. You got to be really patient, which is another thing very hard with the advent of all these machines and speed of information. You and I have talked about this a lot. I think we're on information overload. So the ability to think, not only the ability to think, the ability to carve out time to think. Both of those things have been negatively affected. Charles spends a lot of time thinking. He's a tremendous thinker. People I've seen, obviously, he's like a genius, but he's also a thinker. And that's not so easy to do that. And he's got 6 screens and he's drawing lines and charts. And he's going to be coming out this week with something about a new credit crisis that people are not considering at all. That he's been talking. Oh
yeah, I wanted to ask you about that because that was in.
You wait, my man.
No, you can't keep me waiting. That's too much of a tease.
Mortgages. Let's put it to you that way.
Well, it's obvious. Okay, look, we see a couple of banks blow up in Europe, right? Mm-hmm. Just happened last week in Austria and. Where was the other bank that blew up in Portugal, right?
Yeah.
So that's not a sign of health for the international banking system.
Why they did. You know what I'm saying? I'm not an expert in that, but I will tell you what Charles is. He's my teacher. So I'm just relaying what he says. I got a good teacher. But Charles has been watching this for years about mortgages and what were done years ago and what effect it's having now, which people don't really focus on. But once you hear it, it'll be pretty, obvious. And that's going to have a pretty negative effect longer term as well to a lot of people. And so all these things, it's funny, cycle's only based on price. One data point. And yet it seems to contain embedded in it a ton of quote unquote fundamental information. Whereas I think a lot of people try and use so much data to find out so much different stuff that it obfuscates what maybe the message is being taught by just price, which is the ultimate voting measure. What's the price?
Sure.
So that's kind of our simplistic statement about something very complex.
So we looking potentially at another housing bust as a result of this
I think so.
Credit crisis?
So. Yeah, I think so. But, what? Have your listeners write in and they'll, ask specifically when he sends this out, which hopefully will be today or tomorrow.
Yeah.
I get to edit it, so I get to see it.
Because I saw that, and, to me, it's obvious, but, the when is really the question.
Right.
Well,
again, Kerry, I'll just say, he did call. If people go on the site 5, 6, 7 years ago, CNBC asked him, Becky Quick asked, would you refinance? And he said, I wouldn't buy the house. He was right. But no, there was no discussion of that he called the top in the housing market. Yeah, they came back. L.A. prices have doubled the last 4 years. Certain markets are...
New York City, yeah, sure.
But my sense nowadays around people are holding on to... I'm a little involved personally with certain things in real estate, and I see what's going on. There's a feeling, I think, not realistic of holding on, thinking prices are going to go up and things. And I think there's this overall topping sense that we see that's going to affect real estate also. And it just takes time for people to see this stuff.
Yeah. Well, being able to pick out the trends before they become obvious to the population at large, there's a real art to doing that as well.
But that's what I think the cycles. I will say one thing to your listeners. I read your gold book a while ago, and every once in a while I pull a chapter out and read it because it's really good. I hope you don't mind me saying this.
I'm blushing a little bit, but luckily we're on the radio, so it's okay.
In your analysis of the history of gold, which you did beautifully, I mean, we're not capable of doing this. We just look at numbers and see when they repeat, but you actually tried to make some sense of all this. But your discussion of it, from what I see, is also taking into account other mindsets of other things along the way.
Yeah, well, it's history. Economic history is really what tells the story, right? So
yeah, I mean, that's what you addressed. We just try and find the repeating pattern in it, which I think everyone's trying to do. But for some reason, Charles, maybe because he found this while in medical school from a complete non-market opening, maybe that's why the truth of it is so real and so appreciated, because it's not like he grew up in the markets, neither did I.
Sure. Hey, I just wonder if the credit crisis is tied in with the whole dollar, with what's going to happen with that.
Again, it probably, according to the big mishmash of things, probably, but it's funny, not funny, and how do all these things line up? We don't try and put them together, by the way. We're not that smart. Mm-hmm. Charles always says, I'm not that smart. This is what it says on the dollar. This is what it says on gold. This is what it says on interest rates via bonds. This is what it says on the market. This is what it says on Nat Gas. This is what it says on crude.
Sure.
You want to start putting together the hip bone, the thigh bone? Be my guest.
Yeah.
Let others. We're smart enough to do that. We ain't smart enough to do the other thing. And humility is the more we do this. And he's still, I'll tell you one thing, as you look at a ball player and you see he's still a kid. Look at the center for San Antonio. Guys, how long has he been playing? He lost 30 pounds and he's still a kid. Charles is still a kid. He'll still call me up sometimes and go, did you see that went right to the number I picked? And after 30 years of doing it, it's a really good sign.
Hey, got it. So, hey, David, just tell us how we get that free trial, where to email you.
Go to charlesnenner.com and there's a button there that says contact us, and write and say, I heard David speaking with Kerry. I like the month trial. And I thank you again. It's always a pleasure talking to you, and I look forward to the future that you and I have.
Absolutely. And just go over to financialsurvivalnetwork.com and you can click the link in the show notes to this interview. And don't forget to sign up for the newsletter. You want to support the show, go over to clubfsn.com and just click one of the buttons there. And we appreciate it. And David, we'll talk with you again real soon.
I'm looking forward, Kerry, very much. Take care.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.